All righty, folks. It is Fed Day. Fed Day is on Wednesday. Wednesday, we always talk Matt the mortgage guy. So what do you think, Matt? Is the Fed going to give you another quarter point kick in the nuts, or what's coming with rates?
I finally gave in. all, Everybody around me is just like hoping for rates to come down. I said, you know what? Higher for longer. Fine. I'll roll with it.
Let's go.
And, based on our last conversation, when, rates are higher and demand is down and it creates opportunity for investors, I'm cool with that. Right.
Yeah.
And so honestly, whatever they do today, whether it's a pause or a hike, I think everyone's going to be paying attention, as always, to the press conference, what they say about the future, and what dot plots show. But I think it's pretty consensus now that higher for longer is a real thing. Yeah. That they're gonna do what they said.
I think so. I think we're gonna be over 7% for the month of September. It wouldn't shock me if we're above 7% for most of Q4 mortgage rates.
Yeah.
I think what the mortgage market is hungry for is, for them to be done. I suspect the hawkish pause today, meaning they're going to pause, but they're going to make all kinds of threats about we'll raise in the future. I think the raises are over. I think you've got a government shutdown, a couple weeks away. You've got student loans going. You've got high oil prices. And high oil prices, yes, they're inflationary, but they're also high oil prices act like a Fed rate increase because it takes disposable income away from consumers. So it's actually helping the Fed higher oil or specifically gas prices. So I think they're done. I think they got to let the lag effect come. I don't think they can declare victory, and don't expect them to declare victory. They don't want to give the market an inch, so they're going to talk tough. But that said, we could have mortgage rates over 7% by the end of the year. And that is going to slow the market down. Tomorrow, we get existing home sales, which I'm calling below 4 million. And I think actually my call is 3.85 million, which is way below consensus. Consensus is for 4.1 million. So it's going to be interesting to see what goes on because home sales are definitely slowing down.
Yeah, I mean, it's going to be a fairly cold winter in terms of, transactions and how much is done. Like, I don't think anybody that's paying attention would say otherwise. What I'm interested to see, and you try to look at like the biggest players and what they're doing and what that says about the future. Because I know with my business, the more we stay higher for longer, and some people choose to sit on the sidelines, the more pent-up demand there is.
Exactly.
The wilder it's going to get in the future. I was on a call this morning. The largest wholesale lender in the country, UWM, is hiring 500 people a month, knowing that they're not going to need them in 2023, but saying what's going to happen when rates do trickle down, which everybody, you look at rate stacks, like there's no yield being paid at the higher rates because that paper is not going to last more than a year or two. So whether it's Q2 of 24, whether it's Q4 of 24, even if you think that rates will be higher and we won't, breach 6.5 until 25, when it does happen, I know because I've got 85 pre-approved clients that, given some rate relief or for whatever reason, like they're going to come to play. And, it's going to be interesting to see. What was something I saw? Was it listening to your stuff this morning about home builders?
Home builders. Yeah, home builders are pulling back. Uneducated Economist did a video about a local builder who actually is in financial ability to pay cash for his builds. He pulled back because of costs and rates. So this is a builder that can build with cash, which most can't. Then you have regional banks not lending to builders. So higher rates, again, everybody's focused on higher rates hurting demand. Folks, you're not paying attention. We have supply being destroyed daily with higher rates, not only in existing home sales, which now people are finally getting after a year, but now you have higher rates stopping builders. So if rates go to 6 or 6.5 next year and the builders have to restart, there's no inventory.
Yeah, well, there was an interesting stat that Barry Habib shared too, where it's like you can look at permits, you can look at starts, you can even look at completed on the new build side. And if there's 1.4 million completed, 2.07 million household formations, and like, you know, demographics play a part in this. When you're 30 to 40, you're getting married, you're having a family, you're not in mom and dad's house anymore. Households are being formed at a higher level than homes are being built in an already like really tight inventory environment. Like it's going to be chaotic. So here's my hope. Here's my hope is that if and when rates come down, they come down very slowly. And if we could put a pin on 7% for the end of this year, and then we could put a pin at the end of 25 for, you know, 5%, and let it be a 2-year slow decline. I don't have any say in it, Mike, but why not? Yeah. Right? Put it in the universe. Versus like some steep, you know, decline where we see a 9-day period where rates go from 6.99 to 5.99. That would be bad.
No good. That would, yeah. If we go from we go from 7.5 to 5.99 in a month, that's not good.
Right.
Not good. That it just rips the demand off the sideline and supplies like trickle. Not good. Not good. So at the end of the day, one of the biggest things I think you'll be looking at is how many of the Fed presidents are going to be talking about more rate increases, right? How many are going to say 0? How many say 1? How many say 2 or more, right? Is anybody going to have the balls to say 3 or more? Those are the things I'll be looking at in the dot plot.
Yeah, it'll be interesting to see because for sure there'll be a couple, you know, on both sides of the fence. We'll see some doves and some hawks and all kinds of animals out there flying. So,
So at the end of the day, I expect a pause with a hawkish pause. What do you think's coming today?
I think it's going to be a pause. But yeah, I think the comments that come out are hawkish. And what was just revised for the inflation data? Was it like they revised it and thought the forward projections looked higher?
Yeah, forward expectations for inflation are coming down. Yes. Yeah,
but then like I think there was some number that was revised. I don't know. I look at so much data every single day. Somebody pointed me towards like UMich, like forward projections of inflation.
Check it out.
Something got revised to 3.7. I'll find it. But whatever the case, we're still operating. We're still doing business. People are still finding great deals. GreatMortgageBroker.com. You fill out that form. You get yourself pre-approved. You find out that you're ready and able. Look at a payment that makes sense, whether it's an investment or a primary. Then you go out and you find great deals. It's simple. Even a dummy like me can do it, Mike. GreatMortgageBroker.com.
Yeah, folks, do the work. Right? Great offers. Later.